Good morning, everyone. A warm welcome to all present for today's webinar on the roads and highways sector in India, hosted by Brickwork Ratings. My name is Vikrant Chaturvedi, Associate Director Research, and I'm pleased to serve as your moderator for this insightful session. Joining me are two of our analysts, Girish Basantani and Manasvi Joshi, whose deep knowledge of roads and highways will guide today's discussion. Together, we will explore the forces shaping sector performance, recent developments, and the opportunities and challenges that lie ahead for India's road infrastructure. Before we begin, let me briefly introduce you to Brickwork Ratings. We are one of India's leading credit rating agencies, accredited by the RBI and recognized by SEBI. We provide independent, credible credit rating research and risk assessment services across a wide spectrum of industries, including banking, financial services, infra, and corporate sectors. Let's begin by setting the stage. FY25 has marked both progress and challenges for India's highways. On the positive side, the Ministry of Road Transport and Highways constructed over 10,600 kilometers of highways in FY25, surpassing its annual targets, while a cumulative 5,614 kilometers of national highways were completed against a target of 5,150 kilometers. The sector continues to draw high investments, with the government allocating approximately 2.87 lakh crore rupees for FY26 and focusing on faster execution, asset monetization, and public-private partnerships. Yet, the pace of highway expansion has slowed compared to previous years, registering the lowest project award and construction rates in several years. Construction totaled 10,660 kilometers in FY25, but the sector saw a decrease in new project awards and a moderate increase in per day progress. Execution delays, financing challenges, and heightened competition remain key issues for developers and investors. In this session, we will dive into the current macroeconomic environment and factors driving the roads and highways sector in FY25, recent trends in project awards, construction, investment, and asset monetization, sectoral challenges and opportunities arising from new government initiatives, technology adoption, and PPP models shaping FY26 and beyond. Following this presentation by our speakers, we will open up for an interactive Q&A and encourage participants to submit questions throughout the section. Now for the presentation, I would like to invite Girish, who will share his insights in the industry.
Thank you, Vikrant. Good morning, everyone. Thank you for joining us today for insightful webinar. Let's dive into first slide, which provides an overview of market size and dynamics. From FY16 to FY24, the construction of roads and highways experienced remarkable CAGR growth of 9.3%. Looking ahead, it is anticipated a continued growth rate of 9 to 10% CAGR until 2030. In FY24, the National Highway Authority of India allocated record rupees 2.07 trillion for highway construction, marking significant 20% increase from previous fiscal year. India boasts second largest road network in the world, spanning over 66 lakh kilometers. They expected this momentum will be maintained, adding up to 13,000 kilometers in next 12 months, which translate into annual increase of around 5 to 8%. With population of over 1.4 billion, demand for efficient transportation of goods is growing rapidly. Highway remain the backbone of economic movement and economic growth, carrying nearly 65% of freight and 80 to 85% of passenger traffic. The rise of e-commerce from same-day delivery expectation to expanding tier 2, 3 markets demand seamless supply chain networks. Roads and highway must be upgraded to handle frequent, time-sensitive movement of goods and services, reduce logistic cost. The road and highway sector contributes approximately 4% to India's GDP, a significant share when you consider cross linkages with logistic, manufacturing, export, and services. Next slide. Moving on to budget allocation, the Ministry of Road Transport and Highway consistently exceeded its fund utilization, spending rupees 2.75 trillion in FY 23-24, surpassing allocated budget of rupees 2.70 trillion. According to revised estimates for 24-25, the expenditure is projected to be higher than the budgeted amount. In FY 25-26, the ministry is expected to spend rupees 2.87 trillion, reflecting 2% increase. A significant portion of these funds is directed towards National Highway Authority of India and road infrastructure. The budget allocations for road and highway sector in India reflect a balanced approach that prioritizes debt reduction and operational efficiency while setting conservative construction targets. As challenges persist in project execution and funding mechanism, the focus on monetization and safety improvements will be crucial in enhancing road infrastructure across the country. In FY 24-25, the average pace of national highway construction in India fell to around 29 km per day, down from 34 km per day in FY 23-24. Despite this slowdown, the government has set the ambitious target to speed up construction up to 100 km per day in the near future, aiming to overcome recent bottlenecks. Projects worth rupees 2.5 trillion already been awarded in FY 25-26, with plan to have more projects totaling around 10 trillion in the near future. Next slide. Now let's look at the private participation in road and highway sector. India's road and highway sector has seen a significant growth and development opportunities with strong emphasis on private participation through public-private partnership (PPP), hybrid annuity model (HAM), which combines the element of EPC, engineering, procurement, and construction, and BOT built, operate, and transfer models. These models have become increasingly popular. It helps to reduce risk for private players while ensuring timely completion of projects. In 2024, 30 new projects worth rupees 1.2 trillion awarded under HAM framework. Ministry of Road Transport and Highway have set the target of 35,000 crore in private sector investment for national highway development under a PPP model, marking 17% increase from target of rupees 30,000 crore. However, asset monetization target for Ministry of Road Transport Highway from developed stretches remains unchanged at rupees 30,000 crore, as outlined in the ministry detailed demand for grants. Notably, in FY 24, ministry achieved highest ever asset monetization of rupees 40,000 crore. Private participation have been integral to India's road development strategy. Ongoing reforms, innovative models are essential to sustain enhance private participation in this sector. Government might consider reforms aimed at improving risk allocation, enhancing dispute resolution mechanism, and encouraging institutional investments. Next slide. On this slide, let us explore some key government initiative and capital expenditure. Rural road connectivity. The Pradhan Mantri Gram Sadak Yojana focuses on linking unconnected villages to targeting all weather roads in rural India, which positively impact on healthcare, education, and market access. It continued to expand the new phases. Bharat Mala Pariyojana, launched in 2015, this program aims to develop around 35,000 kilometers of national highways, interconnecting district headquarters, corridors, feeder routes, and logistic park. High-speed corridors, express highways. The government emphasized on developing high-speed corridors with construction target including 10,000 kilometers of new highways for FY 25-26, with around 5,800 kilometers dedicated to high-speed corridors and express highways. Let's now look at the capital expenditure. National Highway Authority of India have significantly increased capital expenditure over the last 5 years, demonstrating government commitment to enhance the national highway network and infrastructure. The increase in expenditure combined with timely maintenance has led to substantial expansion of national highway network. The network has grown approximately from 91,000 kilometers in March 2014 to about 1.46 lakh kilometers. The Ministry of Road, Transport and Highway plan to invest another rupees 22 lakh crore to expand highway network by another 30,000 kilometers by 2030 on 32. Next slide. Let us now look at some key trends and growth drivers. Growth in domestic trade and automobile production. Increased domestic trade flows have contributed to rise in commercial vehicle and freight movement, driven by higher production of commercial vehicles. Automobile production in FY25, including passenger vehicle, three-wheeler, two-wheeler, reached 31 million units. The growth in individual discretionary spending boosted spending on cars, motorbikes, and scooters. Domestic automobile sales, including passenger vehicles, two-wheeler, three-wheelers, totaled 25.6 million units in FY25. Another significant key trend is the growth and importance of India's freight and logistics. The Indian freight and logistics market is projected to reach to the annual value of USD 485 billion, growing at the robust rate of around 9% per year. Logistics in India handles approximately 4.6 billion tons of freight annually, generating transportation demand for over 3 trillion ton kilometer, a total cost of USD 130 trillion. The efficiency of freight transport is widely recognized crucial to India's future economic growth. India's freight and logistic growth is closely linked with road infrastructure development, technology integration, and rising economic activity. Rural road connectivity. The Pradhan Mantri Gram Sadak Yojana, launched in December 2000, is a flagship rural infrastructure program aimed at providing all-weather road connectivity. It targets rural development by enabling easy movement of goods, people, and services, thereby boosting economic activity, reducing poverty through better access. As of August 2025, the Pradhan Mantri Gram Sadak Yojana sanctioned around 830,000 kilometers of road length and completed 783,000 kilometers, delivering all-weather connectivity to numerous previously unconnected rural settlements across India. This has played a vital role in boosting rural development. PM Gati Shakti. The PM Gati Shakti National Master Plan aims to create multimodal connectivity across economic zone. The plan will establish digital platform for 16 ministries to collaborate on planning, implementing projects, utilizing geosatellite imaging, big data. PM Gati Shakti has evaluated over 208 major infrastructure projects worth over USD 180 billion, addressing 156 critical infrastructure gaps, especially in last mile connectivity for sectors like coal, steel, fertilizers, and food distribution. India's Gati Shakti program includes 81 high impact projects with road infrastructure as a priority. India Infrastructure Investment High-Speed Corridor Project for future growth. According to estimate, India will need additional infrastructure investment of USD 18 to 20 trillion over next 25 years to achieve 30 trillion USD economy by 2047. The Cabinet Committee on Economic Affairs have approved the development plan of 8 major high-speed corridors project covering total length of 936 kilometers with nationwide investment of USD 6 billion. Gati Shakti Program, Smart City Mission, Bharatmala Pariyojana, National Industrial Corridor are some of the most significant ongoing projects which will aid to growth and will add to the growth for the sector. With that, now I would like to invite my colleague Manasi Joshi to take us through the rest of the presentation. Thank you.
Thank you, Girish. Good morning, everyone. Thank you for joining us today. Now, let's delve into the technological advancements that are playing a crucial role in the roads and highways sector. These innovations are not only enhancing safety and operational efficiency, but also contributing to cost savings in India's infrastructure. Here are some of the key technologies making a significant impact. First is satellite based toll collection. A GPS based toll system is being developed to enhance toll collection efficiency, ensuring a smoother experience for drivers. Next is AI applications. Projects like iRaste in Nagpur are utilizing AI to monitor road risk and provide collision alerts to drivers, thus significantly improving road safety. Next is integrated road accident database. This app assists police in recording accident data, contributing to an impressive 8% reduction in road fatalities. Next is drones for traffic management. Drones are being deployed for real traffic monitoring, allowing for better management of road conditions and congestion. The last one is data driven road quality assessment. Technologies such as Lane Road Net use deep learning in order to assess road quality, thus ensuring that maintenance and upgrades are data informed. Now, let's see the impact of these technological advancements. The deployment of AI enabled traffic management systems, IoT sensors, and advanced electronics is actively improving real time road safety. This has led to a reduction in accident rates and it also enables proactive interventions. Technologies such as FASTag and satellite tolling streamline toll collection processes, thus significantly reducing congestion on highways. Innovations such as self healing roads and predictive maintenance are lowering long term infrastructure costs. Automated construction and digital monitoring help optimize material usage and minimize maintenance, thus greatly reducing life cycle cost. Tools such as IRAD provide actionable insights for targeted interventions in accident prone areas. Real time data collection and analysis through IoT and advanced analytics aid in tracking project progress, resource allocation, and performance metrics, leading to informed decision making. High profile projects like the Delhi Mumbai Expressway, Samruddhi Mahamarg, and Eastern Peripheral Expressway showcase India's technological prowess. These corridors feature smart monitoring, EV charging stations, solar lighting, and advanced asset management, thus becoming models for future infrastructure nationwide. Next slide, please. Let us now explore India's edge in the roads and highways sector, focusing on key aspects such as mega projects, investment boost, market opportunities, and supportive policies. First, let's see the mega projects. Bharatmala Pariyojana is India's flagship highway project aiming to construct 34,800 km of national highways with a focus on economic corridors, border connectivity, and port access, thus driving logistics efficiency and regional growth. As of 2025, over 20,700 km have been constructed with investments exceeding rupees 8.5 lakh crore. Complementing this, India is rapidly developing greenfield expressway corridors like Delhi Mumbai and Bangalore Chennai, designed for high speed transit that is around 120 to 150 km per hour, which significantly reduce travel time and support industrial, urban, and multimodal logistics development in order to boost the country's economic competitiveness and infrastructure modernization. Now, another contributing factor to India's edge in the roads and highway sector is the increase in investment. India is rapidly advancing infrastructure development through increased PPP involvement, with rupees 86,000 crore in projects approved in 2025, leveraging private capital and innovative models such as HAM and InvITs in order to boost efficiency and funding. High speed corridors, including Greenfield Expressway like Delhi Mumbai and Bangalore Chennai, aim to cut travel time and promote regional industrial growth by connecting key economic hubs. Now, let's look at the favorable market opportunities. India's roads and highway sector is witnessing strong government support and rapid network expansion. The government allocated over rupees 2.87 trillion in the 25-26 budget for the Ministry of Road Transport and Highways, signaling continued focus on infrastructure development. Alongside, the government is building over 37 strategic roads along the India-China border in order to enhance defense mobility. These combined initiatives showcase a bold push towards creating a world class, expansive road network in order to drive economic growth and improve logistics. Lastly, India's roads and highway sector benefits from a liberal investment environment with 100% FDI permitted under the automatic route, reflecting strong government intent to attract global capital and expertise. This policy boost is complemented by increasing private sector participation via innovative models such as HAM, TOT, and InvITs, thus enabling risk diversification and long term monetization opportunities. The government's strong push for infrastructure development combined with open FDI norms is accelerating project execution, upgrading connectivity, and creating a robust pipeline of road projects, thus making India's highway sector highly attractive for both domestic as well as international investors. Next slide, please. Let us now look at the risk associated with India's road and highway sector. The sector is expanding rapidly but faces several challenges and risks that could affect project timelines, cost, and quality. One of the significant risks in the sector is land acquisition. Acquiring land for road projects, especially in rural, semi urban, and densely populated areas, remains a major bottleneck. Disputes over compensation, resistance from landowners, and prolonged legal processes cause delays, sometimes spanning over months or years. Another significant risk factor is environmental issues. Many highway projects pass through ecologically sensitive areas like forest, wildlife habitats, and agricultural lands. Obtaining environmental clearances from multiple regulatory bodies often delays construction. Concerns about deforestation, water pollution, and disruption to biodiversity frequently lead to public protest and legal challenges. Initiatives such as elevated corridors, tunnels, and green highway projects are being promoted in order to reduce environmental impact. The third risk that I want to highlight is the delay in execution. Execution hurdles, including land acquisition, regulatory clearances, and adverse weather conditions such as higher than average rainfall, have impacted progress. Significant delays have been observed in the execution of HAM projects. Out of the total rupees 1.5 lakh crore worth of HAM projects awarded after March 2020, around one third, with a combined bid project cost of rupees 50,000 crore, have experienced delays of around 4 to 6 months beyond the 3-month grace period. Delays in highway projects in India have wide financial impacts. Timely completion requires better stakeholder engagement in land acquisition, faster regulatory approvals, and innovative financing models. Next slide, please. Now, let us look at some of the key financial indicators. The sector faces heavy debt due to capital intensive projects and slow equity growth. Delayed projects and payments strain cash flow, thus worsening debt servicing. Liquidity is tight from long receivable cycles. Rising cost, regulatory delays, and competitive bidding pressure profitability, thus causing ongoing financial stress. The margins of the major companies in the sector remain under pressure from rising input and finance cost as well as from competitive bidding. But government focus on capex and infra push provides some stability. Major sector players are experiencing margin pressure in 2025 due to a mix of rising cost, competitive pricing, delayed government payments, and project risk. Next slide, please. We will now discuss the path forward and future outlook for the roads and highways sector in India. First is NHAI's asset monetization plan. NHAI has identified 33 assets across 12 states for monetization in financial year 2025 with a 20-year concession period and based on weighted average valuation multiples under the TOT and INVIT models. These assets are projected to generate rupees 53,000 to 60,000 crore in revenue for NHAI. Next is comprehensive highway development proposal. The proposal includes developing 18,000 kilometers of expressways and high-speed corridors, decongesting 4,000 kilometers of national highways near urban centers, and building strategic as well as international road networks. Notably, around 35% of the total investment is expected to come from the private sector. Next, the Highway Development Master Plan is to be implemented in two phases. In a recent interministerial meeting, officials reviewed the finalized roadmap. All projects under phase 1 are expected to be tendered by 2028-29 and completed by 2031 and 32. The estimated cost for phase 1 stands at rupees 22 lakh crore. Next is India's need for high speed corridors. According to the Road Transport Ministry, India will eventually require around 50,000 kilometers of high speed corridors, in order to meet future transport demand. Currently, only 3,900 kilometers are operational, but this is expected to increase to nearly 11,000 kilometers by financial year 26-27. Next, award order awarding activity is expected to increase. With the recent slowdown in order awarding activity, many road developers have experienced a dip in their order books. Although a pickup in awarding is anticipated in the current fiscal year, competitive intensity is expected to remain high as developers may bid aggressively in order to rebuild and strengthen their order pipelines. Now, let's have a look at the credit rating outlook for 2025. Rating agencies have assigned a stable to neutral outlook for the Indian roads and highways sector for financial year 25-26. This sector benefits from strong government backing, regular budgetary allocations, and healthy investor interest. Although execution and debt challenges temper long term optimism. The National Highways Authority of India continues to enjoy the highest investment grade ratings, supported by government guarantees, stable revenues, and active monetization of assets, in spite of high overall leverage and contingent liabilities. Lastly, major private highway projects, especially those under the HAM and EPC models, are seeing stable or positive outlook revisions as operational risk abate and annuity payments stabilize cash flows. However, project stage companies still face risk related to prepayment. Thank you. That's it from our side. I will now hand it over to Vikrant to open the floor for questions.
Thank you, Manasvi. Now we will take some of the questions that we received during the registration. First question: government allocations were quite huge in the recent years, yet the scale of infrastructure projects requires huge funding. What is the opinion on government sustaining this spending in the upcoming years? Girish, would you like to take this?
Yeah, sure, Vikram. Quite a relevant question. Economic survey indicate that while allocation continue to rise, achieving Viksit Bharat by 2047 will require maintaining or increasing current spending levels, greater private participation, and innovative financing methods. Asset monetization by government and ministry continue to be the strategic focus. Their plans for 2025 till 2030 aim to generate around rupees 10 trillion by leveraging existing road assets and fund new projects, improving government liquidity and attracting additional capital. So just to summarize, India's capex in India's road and highway sector will set to be remain robust in next few years, where government will capitalize from asset monetization. That's all from me.
Thank you, Girish. I don't see any other questions, so thank you everyone for joining our webinar today, and we look forward to seeing you in our future events. Thank you.
Thank you.